Okay, let's unpack this. Have you ever found yourself wondering what truly defines the financial health of a global tech company?
Right.
It's more than just the bottom line, isn't it? Especially when you factor in things like, well, cutting edge tech like AI.
Exactly. It's a complex picture.
So today we're diving deep into the first quarter results of Zensar Technologies. They're an experience engineering and engagement solutions company headquartered in Pune, India, working with what? Over 145 global clients?
That's right. And our mission here really is to cut through the jargon, pull out the key insights from Zensar's consolidated financials for Q1 FY26. That's the quarter ending June 30, 2025.
Yeah.
We're looking at their press release, the analyst presentation, board meeting outcomes,
Uh-huh.
trying to understand not just what the numbers are, but, why they matter.
Especially now, right? With AI shaking things up and all the global factors at play.
Precisely.
So you'll get a clear picture of their revenue growth, profitability, how different bits of the business are doing. But here's where I think it gets really interesting. We'll also try to uncover the specific real-world AI projects driving their growth and, the bigger strategic moves they're making.
Yeah, the how behind the numbers.
Exactly. So let's start with the foundational stuff, financial health. Zensar reported revenue of $162.0 million for Q1 FY26. What does that actually tell us in terms of growth?
Okay, so $162 million. That translates to 4.9% year-over-year growth in reported currency.
Right.
But maybe more importantly, it's 3.8% YoY growth in constant currency.
Ah, okay. Why is that distinction important again?
Well, constant currency basically strips out the effect of, currency fluctuations, exchange rates moving around.
Yeah.
So it gives you a cleaner look at the underlying business performance.
Got it. Makes sense. And quarter over quarter?
QoQ, we saw 3.3% growth reported and 1.9% in constant currency. So steady growth, not perhaps explosive, but solid, consistent demand.
Solid and consistent. Okay. And what about profitability? Are they turning that revenue into decent earnings? Managing costs?
Yes, they seem to be. Gross margins were at 30.5%, and that actually showed sequential growth, 20 basis points QoQ.
20 basis points. That's 0.2%, right?
Exactly. Small but positive movement.
Mm-hmm.
Shows good core profitability management. Then you have EBITDA earnings before interest, taxes, depreciation, amortization. That margin was 15.2%.
15.2. Okay.
And the profit after tax, or PPT, margin, the net profit basically was 13.1%. Both pretty solid figures. Suggests good cost control, operational efficiency.
So financially, things look pretty stable, good momentum. What about new business, the pipeline, and their cash situation?
Good question. They booked new orders, TCV, total contract value worth $172.0 million. That's up 11.7% year over year. Pretty impressive.
Yeah, that's strong growth in bookings.
It really points to good future revenue potential. And on the cash front, they're sitting on healthy cash and investment reserves, $315.7 million.
Wow.
Yeah, that's a substantial cushion. Gives them stability, flexibility for investments, M&A, whatever they need.
Okay, so the numbers paint a picture of, well, consistent health. Let's hear from the people running the show. What are the leaders saying? How are Manish Tandon, the CEO, and Pulkit Bhandari, the CFO, framing this quarter?
Right, the commentary. Manish Tandon, the CEO, he called it a strong quarter with steady revenue growth. He specifically flagged, and this is key, growing traction in AI-led deals and impactful solution delivery.
Ah, the AI piece again. We'll definitely circle back to that.
We will. He also pointed to internal strengths, like their lowest attrition in 2 years. That's significant. And healthy utilization levels. He puts that down to focusing on reskilling and upskilling in next-gen tech.
Interesting. So focusing on their people, what about the CFO's take, especially with, the wider economy?
Pulkit Bhandari, the CFO, he echoed the robust revenue and the healthy cash reserves. But he also added a note of caution. He said they're cautiously optimistic for the rest of the year.
Cautiously optimistic. Why the caution?
Well, he mentioned political unrest and macro uncertainties. Standard concerns right now, really. But he's stressed they're relying on their core operational foundations. So focusing on what they can control. Efficiency, delivery.
Makes sense. Okay, we've got the overall picture, the leadership view. Let's slice it differently. Where is this $162 million coming from regionally, industry-wise?
Okay, breakdown time. The U.S. region was definitely the engine this quarter. Strong sequential QQ growth, 4.3%, and the same YoY, 4.3% in constant currency. It makes up like 68.3% of their total revenue.
Wow, over two-thirds from the U.S. How about Europe and Africa?
Europe's a bit mixed. It actually saw a sequential QoQ decline of 5.8%,
Hmm.
but looking year over year, it still managed 3.8% YoY growth. So maybe some short-term softness, but longer-term growth still there.
Okay.
Africa was more modest, slight growth sequentially, 1.5%, and just 0.6% YoY.
Interesting mix. So the U.S. is really carrying the load right now. Does that pattern hold when you look at the industries they serve? Are some sectors hotter than others?
Absolutely. There are clear standouts. Healthcare and life sciences, huge growth, quarterly YoY growth of 16.5% in constant currency, and 5.2% QOQ. That's really strong.
16.5% YoY in healthcare. That's significant. Any others doing well?
Banking and financial services, BFS,
Hmm.
also performed well, 8.2% YoY growth, steady.
Okay.
On the flip side, telecom, media, and technology saw a decent QOQ growth, 5.5%, but it was actually down 5.6% compared to last year.
A decline there.
Yeah. And manufacturing and consumer services also declined sequentially, down 4.1% QOQ. So definitely seeing stronger traction in specific areas like healthcare and BFS.
Right. So given those dynamics, U.S. strong, healthcare booming, some other areas softer, how's that reflected in their service offerings? Are they shifting focus?
It looks like it. If you look at the revenue mix by service line, digital application services is still the biggest piece, 78.9% of revenue. But that's actually down slightly from last year.
Okay, so DaaS still dominant but shrinking a bit. What's growing?
Cloud infrastructure and security, that's now up to 21.1% of revenue. It was 18.3% in Q1 last year.
Ah, so a definite shift towards cloud and security.
Exactly. It suggests a strategic portfolio adjustment towards these higher growth areas. And often, cloud is the foundation for these AI initiatives everyone's talking about.
Right. Brings us back to AI. This is where, like you said, the strategy really comes alive. The CEO mentioned AI-led deals. Can we get into specifics? What are some real-world examples of Zensar's wins this quarter using AI? How are they actually delivering value with it?
Yeah, this is the exciting part. They shared several examples. For a big sports betting and gaming group, they're doing a design system migration leveraging AI. Think smoother user experiences, faster development.
Okay, AI in design.
And then for a U.S. pharma company, it's Gene AI and AI Ops for enhanced user experience and business insights. So using AI for operational intelligence.
Makes sense for pharma.
For a rating service organization, they're using their Zensar AI Buddy with Azure OpenAI to, get this, reverse engineer code.
Whoa, really? For modernizing old systems?
Seems like it. Pretty cool application. Then for a UK entertainment company, AI-led user research to drive digital innovation.
Using AI to understand customers better.
Yep. For a UK financial institution, Gen AI-assisted information gathering for risk assessments, speeding up compliance, basically.
Efficiency in finance. Got it.
And for a fintech, AI-led automated generation of legal contracts, pulling data from different documents. Imagine the time saved there.
That's huge. Automating contract generation. These are really diverse examples. Do we have any maybe deeper dives, case studies showing the impact?
Yes, they did share a few that really highlight the results. For a big manufacturing company, they built an AI-powered weld quality control system using machine learning, image processing.
Weld quality, how accurate.
They achieved about 97% weld classification accuracy and significantly cut down manual inspection time. That's real ROI on the factory floor.
97%.
Wow.
Okay, what else?
For an auto insurance provider, they developed an AI-driven agentic flow using GPT 4.1 and Oracle's AI database. It basically helps automate legal dispute resolution.
Automating legal disputes, how?
By parsing huge amounts of unstructured legal documents. It makes the decision-making faster, potentially fairer. Really complex stuff.
Incredible. And one more.
Yeah. For a UN agency focused on reproductive and sexual health, Zensar deployed an AI-powered knowledge assistant. It uses semantic search, a Vertex AI chatbot.
And the result?
Boosted productivity by 50%. 50. And it gave global staff access to knowledge that was previously fragmented, democratizing information, essentially.
50% productivity boost.
Yeah.
AI finding welds, automating legal docs. These aren't just buzzwords. This is real, measurable impact. Puts that impactful solution delivery into perspective.
Exactly.
So, okay, great client work, but what about internally? How's the company itself doing? Workforce health, operational stuff?
Internally, the signals look quite positive. That voluntary attrition rate we mentioned,
Yeah.
LTM, last 12 months, it dropped to 9.8%.
9.8, that's really low for IT services, isn't it?
It is. The CEO called it their lowest in 2 years. Big indicator of employee satisfaction, retention. Utilization, excluding trainees, is healthy at 84.3%.
Okay.
And there's that subtle shift we see from on-site to offshore delivery. Offshore is now 52.6% of revenue. That usually helps with cost efficiency. Total headcount, just over 10,600 globally.
10,600 people. And client relationships. Are they getting more business from existing
It's
clients?
an interesting picture. The total number of active clients is stable, 166. And the number of clients spending over $1 million dollars a year actually dipped slightly.
Oh, is that a concern?
Maybe not, because on the other hand, they saw an increase in their bigger client categories. The $10 million plus clients went up to 16, and the $20 million plus went up to 6.
Ah, so fewer smaller clients perhaps, but growth in the really large strategic accounts.
That's what it suggests. Deeper relationships, more value delivered to those key clients, quality over just quantity.
Makes sense. Now, it's not just about the financials or the tech wins, right? Reputation, company culture, that matters a lot, especially for attracting talent. Any external recognition this quarter?
Yeah, they picked up some notable accolades, recognized in the top 50 of India's best companies to work for 2025 by Great Place to Work. That's a big one for employee culture.
Definitely.
They also won gold at the ETI World Future Skills Awards for their learning management technology. Ties back to that focus on upskilling we heard about.
Right, investing in their people.
And named a strong performer in the White Lane Research UK and Ireland IT sourcing study that speaks directly to client satisfaction and delivery quality in a key market.
Good external validation then. Okay, let's broaden the lens again. ESG, environmental, social, governance. Huge focus area now. What are Zensar's commitments looking like? Are they specific?
They are surprisingly specific, actually. Suggests a serious commitment. On the environment side, net zero greenhouse gas emissions by FY45. A 50% cut in their energy performance index by FY30, using FY19 as a baseline. Staying water positive. Zero waste to landfill for their own buildings. Pretty concrete targets.
Net zero by FY45, 50% energy cut. Those are ambitious. What about the S social?
Social goals include hitting 35% women associates by FY27, reaching 225,000 lives through community development by FY30, an average of 80 hours of training per associate by FY30, and maintaining a high employee happiness index score, 82 or more.
35% women, 80 hours training, happiness index, very people-focused, and
Nope.
governance.
Governance, 100% compliance on code of conduct training, strengthening their internal ethics process, the ombudsman, assessing all suppliers based on sustainability criteria by FY30, plus obviously commitment to data privacy. It's got a comprehensive approach.
It really sounds like they've thought through the ESG piece in detail, embedding it across the business.
Okay.
Okay, for listeners who track the markets, a quick snapshot. Where does Zensar stand today?
All right, market check. As of June 30th, 2025, the share price was INR 842. Market cap around INR 19,141 crore.
Okay.
Shareholding pattern looks fairly standard. Promoter group holds about 49%, mutual funds 18%, FPIs, foreign investors nearly 15%, and others around 18.5%. Pretty stable structure.
Got it.
So wrapping it up, what's really striking, I think, is how Zensar seems to be weaving AI into its operations and client solutions. It's not just talk. It's driving growth, efficiency.
Right.
And they're doing this while navigating, the tricky macro environment and at the same time making these quite ambitious ESG commitments. It paints a picture of a company trying to balance growth with responsibility.
Exactly. They're showing concrete examples of AI delivering value, moving beyond the hype. You see it in manufacturing, insurance, even UN agencies. It really underlines how these specialized digital transformation services are becoming critical in, well, pretty much every sector.
Yeah, the practical application is key.
Yeah. So thinking about everything we've discussed, what stands out most to you about Zensar's quarter? Maybe how they're blending that AI focus with those serious ESG goals. And looking ahead, how might that combination, financial discipline, tech innovation, and this clear focus on people and planet, how might that reshape what we expect from IT services companies in the future?